Federal Reserve holdings, foreign central banks, they really skyrocketing. That's when the dollar rally began. Gold and silver broke down, falling below the 200-day moving average. This is a short-term negative. It doesn't mean there's a long-term negative. Oil sold off, as I said, we predicted this last time, 147 to 112. You could have shorted oil. Buying airlines is the same thing as shorting oil, but it was gave you much more bang for the buck. It's the same trade, basically. Here's the dollar chart. There's the 5-month base. We pointed out that gap before. This is a chart we had in a previous meeting. And then it said, there's that big gap. It may have to be filled. It's called the breakaway gap. It's more like a breakdown gap, where you go to a different trading range, and then in this case it's lower. There's now two gaps. There's one on the right side that's also a breakaway gap, and we're now trading higher than that. So this is called a floating island. You have this piece of the chart that's not connected to anything on either side. So this gap will now act as support for the dollar. Okay, here's resistance. Sharp resistance is right above where we are right now. So the dollar should run into trouble around 77, 78.
So is the fact that other central banks, foreign central banks, are buying more dollar-based dollars?
They're buying dollars, basically.
They're buying dollars?
We are probably buying dollars also, which means we would be selling euros or selling yen.
Is this affecting so I suppose this is all casually related to the fact that the dollar has gained some strength related to the euro?
It's most of the reason. The big banks create the currency, but there's no real currency market. And all of those big banks have a relationship with the Federal Reserve in the United States or their central bank in their country. So they're like this. I mean, to say these movements happen independently, this is highly naive. Okay, this is oil. Notice it's almost got to its 200-day. That blue line is the 200-day moving average. Slice right through the 50. Now, I'll look at the this top thing with the circle is the RSI. If that got to 20, you would say it's probably done. That's not at 20 yet. We predicted in this meetup the oil will go to 100. That's our projection. There's a big gap on the chart between 104 and 106 that needs to be filled. We pointed this out 2 months ago at least, maybe more. And said, here's this big gap in the chart. It's just sitting there. Oil will want to go down to that. It's got about 112. It's almost gotten to that gap. It doesn't have to get there next week or even next month. It's going to take a few months to get there. At some point it will meander down there, and then oil is probably ready to start going up again. In fact, there's a report out on oil. As long as it stays above 85, it's still, the long-term uptrend is still intact. This is the breakdown of gold. That blue line is the 200-day. And it fell below that and then gapped down further. Notice the RSI is about 20 though. That's the usual bottom. So that doesn't mean it has to be the price bottom. What could happen is that could go up and then gold could hit a lower bottom with the RSI higher. That would be called a positive divergence, and that would be good news. But that hasn't happened yet. Okay, silver. This has also hit that 20. Actually, it's a tinge above it. This may need a positive divergence too. You have to go up and come back down for a while.